And how about the proposed stress test rule? Why require the stress test for credit unions when they were not included in the Dodd-Frank Act?
Um, the, pro- the proposal requiring stress tests for credit unions over $10 billion is extremely important. Our share insurance fund is $11.7 billion. So there are four credit unions with assets over $10 billion. Um, Three of those four are larger than our share insurance fund. So it's a very significant risk to the fund. Um, and there is no reason why a credit union of $10 billion or more should not be held to the same standard in terms of forward-looking testing that other financial institutions are held to. Um, this is really an extremely important issue for the entire industry because we want to make sure that the share insurance fund is safe, and this is one way to do that. The stress tests are forward-looking. So, and the tests would be performed by NCUA. The costs would be borne by the industry, not by the particular entity. The big decision that we have put out for comment is whether the results of the test should be made public or not. And we really were going back and forth on the one hand, on the other hand, and felt that this was something that we really wanted to get some input from the rest of the industry on. So we do hope that we hear comments about what really makes the most sense, and what would work best for the safety and soundness of the industry.
You had expressed some concerns about the lack of stress tests among the large credit unions. What are those concerns about the stress testing issue at this point?
Well, capital adequacy is extremely important, both in terms of credit unions, banks, and nationally and internationally. It's been the subject of a great deal of discussion and regulation, particularly since the financial crisis. If credit unions don't have sufficient capital, um, then they will not have they will not be able to absorb losses. And if they are in a vulnerable situation, they won't be able to survive. So if a credit union of that size fails, it will have a very dramatic effect on the share insurance fund and on the entire credit union industry. Stress testing is really done to make sure that, looking at forward indicators, these credit unions will have significant capital if certain adverse events occur which affect their balance sheets. And we are recommending that that level of capital be 5%, even though internationally the level set for banks is 4%. But for a variety of reasons, which we explain in the rule, we've raised ours to 5%. But again, we're looking for comments on this. But I personally feel this is extremely important, not only to those particular credit unions, but to the entire industry.